Welcome to our podcast, where we share our professional knowledge and experience for those considering commercial mortgages or loans. If you are in need of commercial mortgages or loans, contact us for a no-obligation free consultation. Let's start today's episode. Startup loans. Starting a business can be an exciting yet challenging journey, and securing the necessary funding is often a crucial step in the process. One option to consider is a startup loan, which provides aspiring entrepreneurs with the capital needed to turn their dreams into reality. These loans are designed to support small businesses and startups, granting access to funds that can be used for various aspects of establishing and growing a business. Basics of startup loans. Startup loans are designed to help individuals kickstart or grow their businesses. As an entrepreneur, you can apply for a government-backed startup loan ranging from £500 to £25,000. These loans come with a fixed interest rate, making it easier for you to plan your repayments and budget accordingly. Unlike traditional business loans, startup loans are unsecured personal loans. This means you don't need to provide collateral, such as property or assets, as security against the loan. However, you'll need to pass a credit check to be eligible for the loan. Repayment terms for startup loans are flexible, allowing you to spread your repayments over 1 to 5 years. This gives you the opportunity to focus on growing your business and generating revenue before having to make significant repayments. Keep in mind that interest will be charged over the life of the loan, but the fixed interest rate ensures that your repayments remain consistent. One of the major advantages of obtaining a startup loan is the absence of an early repayment fee. If your business takes off and you find yourself in a position to pay off the loan sooner than anticipated, you can do so without incurring additional costs. This can save you money on interest payments in the long run and help you become debt-free sooner. To sum up, startup loans offer a great opportunity for entrepreneurs like you to secure the funding necessary to launch or grow your business. With flexible repayment terms, fixed interest rates, and no requirement for collateral, it's an accessible and straightforward option for those looking to succeed in the business world. Startup Loan Scheme. The UK government has initiated a startup loan scheme to support entrepreneurs in starting or growing their businesses. As a government-backed initiative, this scheme provides a personal loan of £500 to £25,000 to eligible individuals looking to launch or expand their business in the UK. Startup Loans Company is responsible for managing this scheme. When you apply for a startup loan through this scheme, you should be aware that it is an unsecured personal loan, which means you don't need to provide collateral or assets as security. The loan offers a fixed interest rate of 6% per annum, and you can repay the loan over 1 to 5 years, depending on your agreement with the lender. One of the highlights of the Startup Loan Scheme is the 12 months of free mentoring it offers alongside the financial support. This mentoring service assists you in navigating through the initial stages of establishing your business and addressing potential challenges. This support system is crucial in increasing the chances of success for your business venture. To be eligible for the startup loan, it's essential to meet specific criteria, such as being a UK resident with the right to work in the country, being 18 years of age or older, and having a feasible business plan and cash flow forecast. Your credit score might also be a determining factor in the application process. In summary, the Startup Loan Scheme is a valuable resource for entrepreneurs in the UK, providing not only financial support but also mentoring to ensure the successful establishment and growth of your business. Make the most of this opportunity and take the first steps towards achieving your entrepreneurial dreams by applying for a startup loan today. How to apply for a startup loan? When you decide to apply for a startup loan, the first step is to check your eligibility. To be eligible, you must be a UK resident, be 18 years of age or older, have the right to work in the UK, and have a UK-based business that's been trading for less than 36 months source. Once you've established your eligibility, it's crucial to prepare a solid business plan. The business plan should outline your business's objectives, your strategy for achieving those objectives, and provide a detailed financial forecast. This document is essential, as it helps the lender evaluate your business and its potential for success. Once you have your business plan in place, proceed to complete the application form. This form will ask for your personal information, business details, the amount of loan you're seeking, and a summary of how you plan to use the funds. Be prepared to provide accurate and detailed information to increase your chances of approval. During the application process, the lender will carry out a credit check to assess your financial history. Be aware that your credit score will play a role in determining whether your loan application is successful. It's a good idea to review your credit report before applying so you can fix any inaccuracies and prepare for any possible questions. As part of the application, be prepared to submit additional documents, such as proof of identity, proof of address, and bank statements. These may be requested by the lender to further evaluate your eligibility and establish your ability to repay the loan. By following these guidelines and ensuring you meet the eligibility criteria, you increase your chances of securing a startup loan for your business. Remember to be clear, concise, and thorough in your application, showcasing your knowledge and confidence in your business venture. Support and benefits of startup loans. One of the key benefits of a startup loan is the free mentoring and support that is provided to successful applicants. This invaluable guidance can help you write a solid business plan, set realistic goals, and navigate through the initial stages of starting your business. Another advantage of securing a startup loan for your business is access to finance. These loans provide personal loans for business purposes of up to £25,000 at a 6% fixed interest rate per annum. This funding can be instrumental in taking your idea from concept to reality, covering costs such as equipment, marketing, and initial operating expenses. In addition to financial assistance, startup loan recipients also receive dedicated mentoring and support. This mentorship can prove invaluable in helping you overcome common challenges that new businesses often face. The mentors are experienced professionals who can offer expert advice, guidance, and encouragement, enabling you to make well-informed decisions and grow your business with confidence. Moreover, the startup loan scheme is designed to be accessible and inclusive, ensuring that viable business ideas have access to the finance and support they need to thrive. By collaborating with national and regional business support partners, the program ensures that you can receive expert advice tailored to your unique business needs and local market conditions. In summary, startup loans offer not only financial support but also valuable guidance, mentoring, and a network of expert professionals eager to help you succeed in your entrepreneurial journey. Taking advantage of these resources can be crucial in setting your business on the path to success. Financing options. When starting your business, understanding the various financing options available to you is crucial. In this section, we'll briefly discuss some commonly used funding methods, such as venture capital, bootstrapping, and grants. Venture capital, VC, firms invest in early-stage businesses with high growth potential in exchange for equity. This means that they provide capital in return for a percentage of your company's ownership. Partnering with a VC firm can not only provide essential funding but also valuable advice, resources, and connections. Bootstrapping. Bootstrapping involves using your own personal financial resources or revenue generated by your business to fund its growth. This approach is suitable when your financial needs are modest and you prefer to retain full control over your company. As a consequence, bootstrapping may require you to be more resourceful and cost-conscious during your initial growth phase. Grants. In some cases, your business may be eligible for government subsidies and grants. These often do not require repayment or giving up equity, making them valuable sources of funding. Be sure to research available grants and their eligibility requirements carefully. Debt financing. You can raise funds through debt financing by taking out loans from banks or other financial institutions. As you repay the loan with interest, you maintain full ownership of your company. However, it's essential you have a clear plan to generate revenue and repay the loan, as falling behind on repayments can lead to complications and risk to your business. In summary, you have a variety of funding options to support the growth of your startup. Consider the pros and cons of each method, and choose the option that best suits your specific needs and circumstances. Keep in mind that you may need to combine multiple financing methods as your company expands. Building resilient business. Achieving business resilience is essential for the longevity and success of your startup. As an entrepreneur, you can optimize your business model and operations to adapt in the face of adversity. In this section, we will discuss a few key aspects of building a resilient business. Firstly, establish a sound contingency plan to ensure you are prepared for any unexpected events. This involves identifying potential risks to your business and creating strategic plans to mitigate them. By understanding the possible challenges, you can be proactive in addressing them, reassuring stakeholders of your company's stability. Effective communication plays a crucial role in promoting business resilience. It is important to engage in transparent and open dialogue with your employees, investors, and customers. Prioritizing clear channels of communication helps build trust in your leadership and keeps everyone informed about the business's goals and strategies. Next, thoughtfully consider your recruiting strategies to create a strong and adaptable team. Hiring individuals with diverse skill sets and experiences enhances your business's ability to address a variety of challenges. A robust team with varied perspectives on problem-solving contributes to the overall resilience of your enterprise. Here are some steps to improve your business resilience. Perform a risk assessment to identify vulnerabilities in your processes and operations. Develop contingency plans for potential threats and disruptions. Strengthen communication lines between all stakeholders. Foster a positive company culture that embraces change and adaptability. Emphasize diversity and adaptability in your recruiting process. By focusing on these areas, you can confidently develop a more resilient startup that can weather potential challenges and emerge stronger. Success in building business resilience will provide a solid foundation for the growth and sustainability of your enterprise. Managing business finance. As you begin your startup journey, it's essential to manage your business finances effectively. Adequate planning and careful monitoring can help you maintain profitability and ensure your business is financially stable. One of the most critical aspects of business finance is cash flow. Cash flow refers to the money coming in and out of your business. Having a good cash flow means you can pay your bills and meet financial obligations. To do this, be sure to prepare a cash flow forecast. This forecast will help you predict your business's income and expenses, allowing you to identify potential cash gaps and determine how much funding you need. Your cash flow forecast not only helps you manage your finances but can also serve as a benchmark for your profitability. Profitability is the difference between your income and expenses. To improve profitability, focus on reducing costs where possible and finding ways to increase your sales or revenue. Startup loans are an excellent option if you need additional funding for business purposes. To secure a loan, approach lenders confidently, showcasing your forecast, business plan, and financial projections. Be prepared to negotiate terms and do thorough research to find the best financing options for your startup. Ultimately, managing your business finance goes hand in hand with smooth operations. Regularly review your cash flow forecast, make adjustments as needed, and stay aware of your financial position at all times. By doing so, you can make informed decisions for your startup, ensuring long-term success. Additional information. When considering a startup loan for your business, it's vital to understand the options available and the various aspects that may impact you and your enterprise. Having a clear understanding of the features offered, the guidelines to follow, and potential challenges will prove invaluable in making informed decisions for your new venture. Startup loans are designed to cater to the needs of new businesses and small businesses. The UK government-backed Startup Loan Scheme offers unsecured personal loans ranging from £500 to £25,000 at a fixed interest rate of 6% for up to 5 years. This scheme is viable for individuals over the age of 18 who have not yet launched their business or those with businesses that are just starting. As you plan your business's finances, taking into account your property needs and technology investments is crucial. Allocate funds for purchasing equipment and software, setting up your workspace, and acquiring any necessary licenses or permits. This will ensure that you stay ahead of your competitors and provide the best service to your customers. A startup loan can also play a significant role in supporting your business's mental health resources. As a business owner, you will likely face high levels of stress and pressure, making it essential to invest in self-care and professional support for both you and your employees. Moreover, having prior experience in both your industry sector and business management will undoubtedly help your loan application. This helps demonstrate to lenders that you possess the skills and expertise required to successfully utilize the loan and grow your business. In conclusion, a startup loan can be an incredible asset for turning your business dreams into reality. By being informed and prepared, you'll be ready to make well-informed decisions and push your enterprise towards a bright and successful future. What are the eligibility criteria for startup loans? To be eligible for a startup loan in the UK, you must be 18 years or older and have a UK-based business that has been fully trading for less than 36 months. In addition to these basic requirements, lenders may also consider your credit history, the viability of your business plan, and your ability to repay the loan. For more information regarding eligibility criteria, visit the government.uk website. How to apply for a government-backed business startup grant. You can apply for a government-backed business startup grant by visiting the government.uk website. You will need to provide detailed information about your business, including your business plan and financial forecasts, to show how your business will be viable and sustainable. Once you have submitted your application, it will be reviewed, and if approved, you will receive the funds to help start or grow your business. What are the interest rates for small business loans in the UK? Interest rates for small business loans in the UK can vary depending on factors such as your credit score, loan amount, and the terms of the loan. Government-backed startup loans charge a fixed interest rate of 6% per year. It's important to compare different lenders and loan offers to find the best interest rate for your specific situation. How does the British Business Bank support startup loans? The British Business Bank supports startup loans by partnering with various lenders to offer a range of finance options for small businesses. It helps provide funding for startup loans, including government-backed loans, making it easier for small businesses to access the finance they need to grow and succeed. More information about the British Business Bank can be found on their official website. Are there any alternatives to startup loans for financing a business? Yes, there are several alternatives to startup loans for financing a business, including venture capital, revenue-based financing, incubators and accelerators, and government grants. Each option has its own pros and cons, so it's essential to carefully consider which is best for your specific business needs. You can learn more about these alternatives contacting us. What factors influence the approval of a personal loan for a business startup? When applying for a personal loan for a business startup, lenders will typically evaluate factors such as your credit score, employment history, income, existing debts, and the purpose of the loan. Providing a solid business plan and demonstrating a strong track record of managing your personal finances can help improve your chances of approval. Keep in mind that while a personal loan can be used to start a business, it might not be the best option for every situation, and you should explore other funding options as well. For more information, you can contact us by clicking the link in the description of this video. Thank you for listening to our podcast. We look forward to coming together again in the next episode to share more information and experience with you. For now, goodbye.